just going to give you one thing to think about is where this specific pullback is coming in. This one can come all, let's see, this one can come all the way down to this level. I have even seen it coming down to this level and then continuation higher. So the other thing that I want you to do is to find is to do research on the XY or whatever, where you see those reversals and you take screenshots of where do pullbacks come in. Because I would say this is a shallow pullback. I would say maybe this is how A works out. Then I would say this is like B, pullback B. This is like a pullback C. I don't like it at all, but it's there. Dwayne Weller says, would that theory hold on smaller time frames? Okay, I don't know which time frames we're talking about though, but I guess it does not bother you so much, but it definitely is a threat against a falling pound. But because what happens when it is fundamentals versus technicals, and let's say we go against where you're only technically falling, but fundamentals are bullish, what tends to happen is that if we then fall and we fundamentally or technically has reached a critical point and fundamentals hasn't taken over yet, that tends to kind of happen. Where we reach a target, we are generally just going down, 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 but all of a sudden we have a sudden spike, change of direction, hard change of direction, and we are just left with, well, what happened? Okay. So if you can survive those spikes back up again, then yeah. And then this move here, not that move specifically, but that new trend is now going to continue way longer than this trend. Because fundamental trends last longer than technical trends. If you don't understand what 5% inflation means, that rings no bell for you, spend time on it. Spend time. But my keys here are 2.5% is normal. We're at 5. We are above. Okay? We're above. We're double. Remember, we also had a very large dip last year. So it's comparison. It's like compared to very low bottom, you're going to have very high top. You also need to look into, is it going to increase interest rate in your area? Not so much yet. They still have a QE program on. You have to look at it historically, and then you have to see how it develops. What's the next one? What's the next month? What's the next year? How is it going? And is it increasing or is it not increasing? You have to kind of see that as well, the trend overall. So it's kind of an experience. It's kind of like you have to understand it yourself by researching yourself and kind of understanding the pain yourself. But reading a lot of reports will help you out with that more than anything else.